Hello, and thank you for downloading or viewing our webcast. My name is John Froelich, and I'm a Senior Vice President with Bramasol, the leaders in revenue recognition and the digital solutions economy. We are pleased to present this webcast, and I have here my colleague, Sarah Thompson. Hello, Sarah.
Hello, John. Thank you for having me.
We are excited to be here because we're excited to talk about event-based revenue recognition, which is SAP's cloud solution for revenue recognition. Why don't we dive in? So SAP has a platform of automated revenue management solutions. And what it really allows customers like you to do is choose from a variety of different options depending upon where you are on this spectrum. So let's talk about that for just one moment. On the far left-hand side, we can see that we have organizations that might have what we'll call lower volume or lower complexity simple accounting. At Bramasol, we think of it as volume, velocity, density, and complexity. The lower volume, the lower velocity, lower complexity that you have, the simpler or more simplistic solution you might be able to utilize. As we cover across various industries, often we find that these dimensions become more complex. On the far right-hand side, companies like telcos, managed services companies, other kinds of service providers in the media telco industry have higher volume, higher complexity, complex accounting relationships, again, focusing on that concept of volume, velocity, density, and complexity. And what SAP has done, and together with SAP, we allow our customers to take on, is different deployment options depending on where you sit in this spectrum. We have the private cloud or on-prem solutions, and those are primarily driven by SAP's Revenue Accounting and Reporting Solution, or RAR, which is available in ECC S/4HANA and is likely the world's most powerful, scalable, and flexible revenue accounting solution. In the public cloud, you can also access what we call contract-based revenue recognition, or CBRR, which is driven by contract-based. So it's all about different contracts. Today, though, we're going to focus on companies that are building up and have relatively straightforward solutions or scenarios. We're going to talk about event-based revenue recognition. This is available in S/4HANA and can be interfaced, by the way, using standard SAP public cloud or private cloud options. It's a standalone solution, so it can be used in a hybrid solution. So Sarah, we have a lot of different benefits, if you will, of this solution. A little bit about what those are.
I would love to. Okay, so some of the benefits of going to event-based revenue recognition in the cloud. First is real-time reporting. Being able to see the one source document and triggers within the reports that come from the journal entries that are posted. You're matching your costs and your revenue, and really being able to drill down within each of these contracts that you have to be able to see the reporting around your revenue. There is no reconciliation that needs to take place. So the revenue resides fully integrated within the SAP Universal Journal. The recognized revenue data is stored in the exact same location as costs and revenue, so there's really no separate instance that you have to do reconciliations, as well as having full transparency. So being able to drill down into the GL accounts, we'll be able to see the actual GL postings that take place within the system and be able to provide full transparency and really clear audits around all of the revenue. So moving to, a new revenue recognition model, being able to have that full auditability around the postings and where you're able to see that recognized revenue.
Well, that's great. And I know there are a number of specific scenarios in which EBRR works best and is designed for. Maybe you can tell us a little bit about that.
Yeah, so EBRR works best with a few end-to-end business scenarios. So SAP really built out these best practices for event-based recognition, revenue recognition for these 5 different models right here. So subscription billing, services, and project-based sales, all without the bundling of IFRS 15. So being able to go in and see a subscription or a service document with the billing documents that are there, project-based services, and then sell from stock with a delivery-based billing. So being able to see these different scenarios. Really today we wanted to focus in on just our subscription billing, show you what a subscription contract would look like within event-based revenue recognition, and just kind of hone in on that. But these are a couple of the different areas that the tool definitely does focus on.
Great, so let's dive right in.
Dive right in. Alrighty. So we're going to go ahead and take a look at event-based revenue recognition. This is SAP Cloud. So we're in the system. This is what it would look like if you were to come in, view your launchpad into getting into event-based revenue recognition. As we can see here, we've got a couple of our different scenarios available. Again, I'm only going to focus on our subscription contracts today.
And this, Sarah, is the public cloud environment, right?
That is correct. Thank you, John.
Great.
So within the subscription contracts, what we're going to be taking a look at today is a contract that calculates and posts revenue based off of the billing plan. So we can see here it's going to distribute evenly across the months, and the billing will trigger the revenue adjustments and posting for billed and deferred revenue. So we'll go ahead and start by creating a contract. When we first come in, we'll be able to see that we're going to create a new subscription order contract. So we'll start by just putting a description on this contract for our customer. Then we need to have a customer sold to party. So we can go ahead and select from a drop down that is available there. When we click enter, it's going to prompt us for our sales division, so we can go ahead and select that, as well as a contact person. So we'll have a contact person within that customer. For this contract, I'm going to make a 1-year contract, so I'll start at the beginning of the month from July of 2023 out to July of 2024. And it's just as simple as coming in and bringing in the products that you're going to be selling to your customer. So we'll go ahead and enter in a product as well as a quantity. And then our contract is good to go. We've created our contract for $120,000. It does have taxes included, so it will include taxes, but we'll be able to see our billing value is going to be that $120,000 as well. So everything we have entered for our contract is good to go, and all you have to do is save. So this is on the subscription order side, so entering in a subscription contract, making sure that everything is good to go. You've got the contract with the customer now. We can see here all the checks are good to go. Everything is available for our contract, but let's actually go in and take a look at the billing document, because the billing document is going, or the billing plan is going to be very important for this particular contract, because as we go into the billing plan, that is really where you're going to be able to start to recognize that revenue recognition. So we can see here that we're actually looking at a monthly billing plan for this contract. So with this contract, we can see we've got $10,000 a month for the year that we created the contract. But let's say for this customer, they've actually decided they would like to have quarterly bills. So we can see that the system automatically calculates the billing from $10,000 a month to $30,000 a quarter. So we're going to be recognizing $30,000 on each of our bills. We can go ahead and save that. So now we're going to be billing the customer in quarters. So within the subscription model in EBRR, you have the option really to do any billing plan that is necessary for you and for your customer. And the revenue recognition is still going to take place as is. In order for us to release this contract into revenue recognition, we have to change our status. Right now, the status is sitting in open, but we need to release it to event-based revenue recognition so that we can start to see the relevant revenue recognition processing. All right, so everything is good to go for our contract. The contract we will be working with today ends in 127. So as we're going through and entering our billing documents and entering our contract, this is the contract we'll be focusing on. The next step we will be working on is generating that billing document. So we need to go in and schedule the automatic run to generate that billing document. So we'll go ahead and create our billing run. run through a quick 3-step process to start immediately, we can go ahead and see that's where we're going to bring in our first date for our contract. So we can see here we're going to bring in our contract 127. Go ahead and make sure everything is good to go, and then you can schedule it. So these are batch jobs that are actually going to run. And if I update our date here, we'll be able to see our schedule for our billing document has been requested. These are batch jobs that will run in the background. I'm running them now manually so that we can trigger them for demo purposes and you can actually see them process. But again, this is an automated job that would run in the background. Once billing documents are created, you can come in and take a look at the billing documents that are out there. So we have a billing document that has been created but has not been invoiced. So we have that $30,000 for our quarterly bill. Go ahead and select the billing document that has been created. And now we can go ahead and actually invoice on that source document. So create those billing documents that are actually going to be sent out to our customer. So we'll associate that with the billing document that we had earlier here, and we'll go ahead and start to create our billing documents. Again, a lot of these processes will be running in the back end, and you'll have running in batch jobs to create these bills. But it's important because you can come in and you can actually see the terms behind the bill. So we can see here we're looking at our subscription contract for 100 units, giving us that 30,000. So this is just our first quarter that we're going to be billing, and this is corresponding back to that original document that we created. So we'll go ahead and save our invoice here, and then we'll go ahead and post those billing documents into the system. So we can go ahead and post it. You'll be noticing that we have our net value of that 30,000 that we're billing the customer, including that $1,200 in tax that we're going to be able to see here. So once everything is created, we can scroll down and we can see the process flow. Anywhere within SAP, you're going to be able to see a process flow of the documents that we're looking at. So we started with a subscription order. It created our billing documents, which gave us our invoice once we invoiced the document. And now we're all the way into the journal entries that have been posted. So what we can do is I can actually drill into the journal entries, and I can actually go back into my financials to see the billing documents that or the accounting documents that have been posted. So this is where we're going to see the receivables original amount that gets posted with the accrued tax as well. If I wanted to, I could actually get back into a deeper dive information from a financial standpoint. SAP also provides the ability, if I wanted to come in and take a look at my accounting document, you can get all the way down into the T account entries. So at this point, in this situation, the invoice has posted in advance. And at this point in time, there is no service that has actually been delivered to the customer. So within event-based recognition, it's going to post it into deferred revenue and receivable adjustment until we've actually run and posted our revenue. So we've got to actually post the revenue for us to be able to see that 10,000 that we're going to be able to recognize this month out of our 30,000 bill that we have given our customer. So we've run through the entire billing process. We've invoiced our customer for the 30,000 after we've created our subscription order. Now we actually take a look at what is our accrued and deferred revenue on our balance sheet. So we can come in and now we're taking a look at the actual revenue recognition process. And when we come in and take a look, we can view, let's look at just our contract. We can take a look and drill into our contract here with our subscription order. We can see here we've got our billed value of 30,000. So this breaks it down based off of income statement and balance sheet. So up in our income statement, we actually have our billed value. We have that 30,000 that we billed for the quarter. It's going to adjust the revenue for that 30,000 and put it in deferred revenue until we've actually got some revenue that we can recognize. So we can see here if we had costs associated, we'd also be able to see cost, as well as any accrued or unbilled revenue. So this is just going to showcase based off of each billing document that gets created. As you continue to scroll down, you'll be able to see in the details below, all of our revenue is in our billed revenue. So we haven't recognized any revenue yet because we haven't done our actual revenue recognition postings. So everything is going to be in billed or deferred revenue under our balance sheet. From here, I could take a look at a chart view or a table. So it gives you the options for some of those analytical views to come in and kind of see where you sit with your contract. I can also come in and take a look at the GL account line items that have been posted so far. So I can drill in, and this is going to focus just on my contract here. It's going to be posting our different GL accounts, but you can also change different views. So you can save views as you go through the different drill through capabilities. So right now we're looking at group GL accounts. I'm going to focus just by our event-based revenue recognition. So that's going to give us all the details that I need for these different postings. We could see the journal entry postings that were made to the GL accounts. What GL accounts are we posting to? What are the amounts that we're looking at? So we've got our original revenue, we've got our deferred and our receivable adjustment that we're going to be adjusting based off of the invoice that we have sent. So these are the postings that have been made before we run the revenue recognition process. So there is a full 360-degree view of what you're looking at. You're able to come in and see the line items of the invoice, the line items of the original journal entries that are posted before we actually post the revenue. So everything is in one place. All your entries get posted into that universal journal so that you can come in and can take a look at those.
And you can sort these, Sarah, on anything you want. If you, for example, want to look at sorting by GL accounts, you can just look at that. To make it easy for yourself, you can just look at that column and sort
Correct.
by those columns, right?
Yep, you can look at just deferred revenue accounts for all of your contracts. You can look across multiple company codes, across multiple service or subscription orders. You'd be able to look across, a wide breadth of filtering down however you really want to look at these different reports.
Great.
So we've seen the revenue up until we've posted. So this is what our contract looks like before. We have billed, we have revenue adjustment, and we have deferred. We don't have anything recognized or available for us to be able to recognize for this contract. In order to do that, we've got to go back and actually run the revenue recognition. So coming in, this is again a batch job that would take place. This is not something that would manually come in, but usually at the end of the period, you would come in and execute your revenue recognition, and that's going to post all of those for that month. So we can come in and take a look at our revenue that's recognized. We're going to start this posting now. So this gives you an option. If, for example, you want to just run one contract, you can see what that would look like. You can run one contract, but really all the information that is needed is a fiscal year, a company code, and a ledger. What ledger and company code are you going to be posting at? They're each going to post separately, and then you can attach additional information. So for me here, if I wanted to bring in my contract, I can do so as well. I can simulate what the posting is going to look like before I actually post it, or I can just let it run. I'm going to run a check. Everything is good so that I can go ahead and schedule my posting run for my revenue contract. Once that schedule has been run, let's just update our date a little bit. Now we have a new service document that has been posted for the month. I can come in and take a look at the results, and this is actually going to give me the exact posting that was made to the journal entry. So with the posting run, it tells us the contract that we're looking at. Here's at what was billed. We had 30,000 that was billed. We are actually able to recognize 10,000 of that as we recognize revenue, and then deferred revenue is going to be the 20,000. So as we continue to scroll, this gives us our receivable adjustment of that 20,000 now that we have posted 10,000 in revenue. And then let's go ahead and actually see what this does to our revenue contract. So with that 10,000 that we're able to recognize for the month, when I come back and take a look at my revenue contract, we'll have updated results on our original contract. So when we had 30,000 billed, that stayed the same. We originally had 30,000 in receivable adjustment and nothing in recognized revenue. But we have 10,000 we can recognize now, so that's going to continue to bring our receivable adjustment down and our deferred revenue, because we're only deferring 2 months out of our 3-month bill that we have recognized, that we have posted. So if you come down and take a look at our recognized revenue, we now have recognized revenue of 10,000 that we can drill into. And if we wanted to go ahead and take a look at our GL account line items again, we would be able to see we now have added 2 additional line items for our 10,000. So we can actually take a look at the postings that have been there. It reduces our receivable adjustment and then gives us that actual value of the 10,000 that has been recognized. So it's going to continue to update that universal journal as postings are made from the subscription, from the invoice, all the way through to the revenue recognition, and you're able to get a clear view, you have full transparency into everything that's posted around that revenue contract.
And you can do the same T account view, right, that you did before.
Correct. Yeah, you can always drill down to every T account from any journal entry that you see posted.
So Sarah, thank you so much. That was a great demo. I think you can see how straightforward and easy it is for customers to use event-based revenue recognition, and the power of the tool provides you lots of different ways to view and understand your information for straightforward revenue recognition, event-based revenue recognition. Maybe one thing you can do is, for those who are more familiar with revenue recognition under IFRS, we know that there are different kinds of POBs. Can you help the audience understand a little bit when we say event-based versus our standard time-based or percent of completes? What does event-based mean in this context?
Yeah, so in this context, normally when you're looking at a traditional revenue accounting system, you're gaining those performance obligations and creating a separate link to a performance obligation from an original order that you have with a customer. For this sense, in the event-based revenue recognition, the system's not doing that. The system is taking the subscription order or the service contract with the customer, and they're actually just taking that and creating the revenue based off of those billing documents. So those billing documents come in and it just posts the revenue into that account. There's no replication or creation of a performance obligation within the event-based revenue recognition system.
Exactly. And you're not creating, in our traditional sense, you're not creating a revenue contract out of this. It's not it's not our normal approach. This is a very straightforward opportunity for people and companies to take advantage of a tool that allows them to easily manage subscriptions.
Correct. Yeah. So, a company that has, orders that they just sell and bill to a customer, quarterly, monthly, a subscription model. If you've got a pretty straightforward subscription model, just taking those contracts and then posting them into revenue to be able to actually see what the recognized and deferred revenue is every month is really just a huge benefit to the customer without having to, build out all those performance obligations and additional information by using something like event-based revenue recognition.
Great. And you created those bill plans and everything here in EBRR, so it's a great system for managing that subscription space in a simplistic way, right?
Correct. Yep.
Great. Well, thank you so much. So wrapping up, let me recap where we are. So we've talked about automated revenue recognition here, and we've explored the EBRR, event-based revenue recognition solution, within the context of what you saw. And you can see coming out of this how easy it is to set up a simple billing plan implement a subscription, and then do the revenue recognition based on that, and how much you have the capability of diving down. I think you can see that this menu-based solution is powerful, allows users to really find things and adapt to the solution very easily. It is flexible. So you saw Sarah show us many different options that we had, and it has some flexibility to it around this event-based revenue recognition concept. And of course, as always, because it's SAP with all of the relevant information provided in one place, it's that diving down, if you will, or drilling down back and forth all the way into all of the details, because it's driven by the Universal Journal. So I hope you got a lot out of this. We look forward to hearing from you. Please reach out to us. We'll be doing similar scenarios on contract-based revenue recognition in the future. We'll also explore some new and other event-based revenue recognition solutions or scenarios in the future. And of course, you can always check out our detailed RevRec and RAR videos on our YouTube channel or through our website. So Sarah, thank you so much for this great overview.
Yeah, thanks, John. It was great.
All right. Thank you, everybody. And thank you for listening to our webcast from Bramasol.